The central bank leaving rates unchanged today. It was the second consecutive unanimous decision for the Fed. Joining us now to talk about it, Al Broaddus, who was president of the Richmond Fed Bank from 1993 through 2004, months before the Fed announced its latest quantitative easing program. Al told Bloomberg Television that the Fed was prepared to resume that program if necessary. Al, great to have you back with Matt and myself.
Nice to meet you.
Hey, can we cross QE3 off kind of our discussion lists, or that's not yet determined?
Well, I think that this statement was a bit of a surprise to me, Carol, in that it suggested that they view the economy as in better shape than I would maybe have anticipated. If you contrast this statement with the one that was issued after the January meeting, the references to the economy all suggest a firmer footing and so forth, and a lot of the more cautionary language was removed. And so that would suggest that the likelihood of something like QE3 is now significantly less than it was before. Do they
still finish QE2? I mean, is that a certainty, Al?
I think so. I think that's in place. All of the market expectations have adjusted to that. So in the absence of something really more dramatic than I think we would expect, Matt, I think that they will finish that program as they have scheduled it. I think the question now is when that program is finished, the next step they could take is to stop reinvesting the principal, when these securities mature. If I had to guess right now, given what we know now, I would say that they would not do that immediately, but that's always a possibility, and I think that's where a lot of the focus of Fed watchers will now begin to settle.
When we talk about inflation, because what they said is actually this is Ben Bernanke's testimony back on March 1st, but he talked about the most likely outcome is that the recent rise in commodity prices will lead to at most a temporary and relatively modest increase in U.S. CPI. Again, they did kind of bring up inflation, but again, they kind of seem to say transitory. It's not a big deal. I mean, you agree with their assessment on that front, that inflation we can kind of take off the table as well, except for maybe some temporary spikes?
Carol, I think that, I agree. I think the most likely outcome is that this upward pressure will be temporary and not bleed into what we call the core inflation rate. But I think the fairly remarkable thing in this statement is that they added in both the first and second paragraph of the statement, and you really have to parse these things because every change is important. They make reference to commodity prices, and there is a statement that statement, and I guess the second paragraph is that commodity prices have been rising. They expect it to be transitory, but they also add a phrase, importantly, I think, but they are going to watch it very carefully. So I think the sense is that for the committee as a whole, their sense of the risk in the inflation outlook, the risk of rising inflation is maybe at the margin higher than it was at the last meeting. So they'll be watching it and ready to react to it if they need to.
So you were president of the Richmond Fed Bank, as we pointed out. So that's not a minor thing. You're saying investors wake up, listen to this, because that's significant.
I think it is, yeah. Investors who follow Fed policy, and anyone who follows a Fed policy, I think, is going to notice that change. To me, that was one of the most striking things about this. Of course, I've been doing this so long, I may tend to give too much emphasis to a change like that, but I think it's fairly important.
Well, I wonder, Al, how much is that a shout out to really the general public? I mean, how much of this is really the Fed getting just a little bit more politically active to defend its reputation, and for Ben Bernanke to defend his reputation as still being somehow in touch with the people as he faces more opposition in Congress? I mean, you as an economist don't need to hear him make a change from core inflation to underlying inflation. It means the same thing. They're just synonyms. He's saying this, isn't he, to the people?
Well, I don't know that this was really strongly politically motivated, Matt, but and I think the reality is that commodity prices have been rising sharply. They may continue to rise. The thought is that it will be transitory. But so I think the economic facts justify their saying what they said. But I think it's in a sense it's convenient, because I think there are a lot of Americans out there who are very concerned about inflation. And when they hear the Fed suggesting that core inflation is well controlled and well behaved and so forth, it gives a sense that maybe they're out of touch. So maybe the fact that they gave this attention in the statement, which seems to suggest a greater sensitivity to the inflation risk, I think that's I think it's fortunate from a timing standpoint that they can say that to the public at this juncture.
Al, one last question, just quickly. So the next policy meeting is April 27th. I guess we'll get one labor report in before that or so. A couple of reports, forgive me. But let me just ask you, what do you expect we'll get on April 27th? Let's look ahead a little bit. Do you think it's going to be more of the same, or could we start to see even some more upbeat, positive comments from the Fed?
Depends on how the economy evolves. Obviously, Carol, there's certainly obviously significant downside risk still to the outlook. You have what's going on in the Middle East and what that might do to oil. You have what's happening in Japan. So things may go downhill a little bit, may turn south, but hopefully that will not be the case, and we'll move through those. And if we can do that, this recovery now seems clearly to have legs in the U.S., and that's true also in many other parts of the world. So we could well see a situation where they are at the next meeting more optimistic about the growth in the economy, and perhaps a little bit more concerned about inflation, and that will, I think, condition what they do with policy going forward.
We got to run. Al, thank you as always. Al Broaddus, former Richmond Fed Bank president.